Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update. It's 2:42 Eastern Time as I'm starting the video, and I wanted to do it with plenty of time to get it out to you guys before the close today and just let you know my thoughts. I'll keep this one relatively brief. Won't be the shortest video, but I'm not going to go very long on it. And I guess the common theme of this video is, although we've had a very impressive reversal in QQQ, as I said earlier, that as far as that goes, that's par for the course. When volatility spikes, you see 2, 3, sometimes even 4 and 5% intraday moves. That is not unusual. In fact, it's common and to be expected. So. But with that being said, let's see what it might mean going forward. But the common theme, again, besides the volatility to be expected, is that as of now, and when I say as of now, this can change. This could change. Probably not going to change much today. It could certainly change tomorrow. But as of right now, nothing in the charts, at least not anything that I see, has changed from a technical perspective. In other words, today's move is not technically significant. Now, what do I mean by that? Well, all right. So we have we'll start with SPY. QQQ is a stronger one today, and I'll go over that in a second. That's all driven by the tech sector. XLK is up over 1%, the strongest sector in the S&P 500, of all of the 11 sectors in the S&P 500, and it is the highest weighted sector in both SPY and QQQ, and much larger even in QQQ. It's over almost, over half of the entire NASDAQ 100 tech companies. So it's really, like I say, it's a very tech-heavy index. All right, so what do I mean by nothing technically significant? So what did happen today, and this is something, in hindsight, maybe I missed it, the fact that when QQQ hit the 200-day, that we might have a reaction off there, and that's what kind of foiled those bear flag breakdowns earlier. But what we did here on SPY is we dipped below the 200-day EMA again. Remember, we kissed it yesterday and reversed off it, dipped below, but again, we recovered it. Now, what might be, at least from regarding the 200, technically significant is if we had already lost that level. What I mean by lost it, tested it a couple times and then broken down, traded with one or even multiple days, multiple candles below that level, 2, 3, 4 closes, and then you regained it. That would be technically significant. That would be, only could be construed as bullish when you regain the 200, like you did right here, once you're below it, and you regained it and back tested. However, we didn't lose it. We lost it on an intraday basis, but that doesn't matter. It's a 200-day EMA. I'm not using this EMA on a 60-minute chart. You could do the math and use the same EMA, but that's irrelevant. So as I said, in recent videos, it is quite common to see key support levels, whether it's a trend line, horizontal price support, or EMA, or simple moving average, get taken out on an intraday basis only to have it snap back above. So the fact that all that was is an intraday break, we're still above it. So we never lost it, so it's not a technically significant event to hit it and stay above it. We're testing it right now. So that's number one. The other thing is you can see we're still below yesterday's candle. It would have some significance, not so much if we closed above this candle, moved above it. And there's also the gaps. I'm going to get to these gaps here in just a second. That's where we stopped so far on QQQ today. And so when I look at this chart, I see this yellow benefit of the doubt trend line. It was broken impulsively yesterday with a big red impulsive candle, solid close below, and we're well below it right now. So really at this point in time, the only thing very significant I could see happening on SPY, there's one other trend line I'll get to in a second, but on this chart would be for over the next day or two, especially if it could happen tomorrow and foil this breakdown on the weekly charts, would be to close back above the trend line. And you want to say that 294 level, remember here, let me flip to another board. There's that trading range. This chart's a little busy here, but I have an alternative trend line right here. I'll just color code these for you. So we have this trend line right now that comes off this spike low right here from looks like late May, early June or so, right there. That was broken yesterday, and it's currently being back tested. It's a minor trend line, but it's certainly, worth watching. There's enough reaction, so solid close back above that to regain it would be bullish. And then you have the gap just above. And what I think more important than the gaps is that big trading range. We'll get to this more on the 60-minute charts, but you can see the August trading ranges. Well watched. Just about everybody and their brother has seen or heard of these trading ranges, I'm sure, if you're in the markets and following technicals. So we entered that, and we're still well within it. So at the end of the day, as of now, despite this rally, there's not anything, technically significant, again, from a bullish perspective that I see. Let's look at QQQ, and then we'll get down to the 60-minute charts. QQQ, pretty much same story. We're still well within the trading range. In fact, we pretty much have been flirting with close to the bottom of the trading range. It's not as well defined on QQQ, but that's it. So we're still well within, and we're within the bottom half of the range as well. We also took out the downtrend line yesterday. Recently with the the uptrend line off the December 24th lows, and today we kissed the 200, and so far a successful test, but we haven't yet moved below it and closed below it. I had to pause the video there for a second to do something. I'm trying to recall where I was at. All right, that's it. So we'll watch again. So far, successful defense of that. And so the next, one, not the only, but one of the bullish technical events here on the daily would be to obviously to regain this trend line, with conviction, a solid close, move and close back above it. And bearish if we take out the 200-day on a closing basis. And you can see a couple nearby support and resistance levels. Let's look at this board. Yeah, that's about it. Same thing there. All right, now 60-minute charts. Let's see where we're at there. Okay, I have a lot of levels on here. I'll try to clean this chart up soon, meaning remove some of these older lines, trend lines that aren't, or resistance levels that aren't significant right now, at least. Maybe I'll just turn the color down a little bit so they don't stand out. But again, you have the trading range right here from August, and we're smack in the middle. There's that 185.90 level mentioned earlier today. And so while we haven't reversed there yet, we've also stopped cold all day. We hit that level. These are 60-minute candles, so we hit it on the last, came right up to it, high of 185.80 versus 185.90, so that's effectively a hit. So now it's the third consecutive 60-minute candle we've been trading on there, and you can see it better on a 1-minute chart. We've flattened out since we hit it. So we've rallied into and so far stopped at resistance. Again, we haven't had a rejection, but that's where I think a reversal is likely to come. And as I said in the other video today, if we pop it and go a little higher, we still have a back test of this downtrend line to contend with. And we can actually bring out this downtrend line. Remember, this was at the time, a significant downtrend line. What we had here recently was a big old bull trap, meaning a false breakout. We had that downtrend line. I showed you at the time we had positive divergence right there on the RSI and PPO. There's your divergence. We had a falling wedge type pattern. We broke out, and then boom, that failed. And so if I extend that trend line, that comes into play here as well. So there's a confluence of the resistance we're coming up on, probably the most important being this 185.90-ish level. That's what I call Gap City. Tons of gaps back here, about in the middle of the trading range. And so that's that. So what would be, in the 60-minute chart, what would be bullish? Well, if and as each of these levels are taken out, and not just a brief pop, but a 60-minute candle close, that helps to firm up the bullish case. But boy, the market has a lot of work to do, meaning there's just a lot of overhead resistance, including the top of those trading ranges, if they happen to get back up there. So that's the 60-minute chart. Like I said, impressive rally, but I put it in perspective earlier that this rally is no more impressive as the preceding sell-offs were. You have, this move right here today off the lows, And again, that very few trades happened there. That was, if you were watching the 1 minute charts, it spiked down virtually instantaneously due to the high frequency trading that fired off right when the numbers came out, the 10 a.m. Numbers. So most of the trades, and you can confirm that by looking at a volume price histogram on a 1 minute chart. These are the volume price histogram bars right here. That'll show you the volume that took place at each trade. You'd have to zero down to a 1 minute chart and you'll see. So anyways, most of the moves happen here, but we'll take it for what it's worth. There's the rip, but again, it's not any different than any of these previous rips that we've seen since this downtrend started, and nor is it any more impressive or even equal to some of the recent dips, the sell-offs that we've had since this thing started. So I'm just trying to put it in perspective and saying, as impressive as a 2% turnaround from lows to highs is, it's just a 1% gain on the day so far. And again, you back out the tech sector and you have almost hardly any gain. You can look at DIA. I mentioned this in the trading room. The Dow, this is the Dow ETF, is up 0.3%, 1/3. We're up a third of what, and this is 30 stocks, but it doesn't have such a heavy weighting in tech. Even the S&P 500 is still only up 0.6%, and this happens to have, again, the tech sector is the heaviest weighted sector in here at over 25% or something like that, and it's still not that. So, and one more way to look at that, you can look at QQQ, and then you can type in the symbol QQQE, and you see QQQE is up actually now 1%. That's odd. Earlier today I had it up at just before the video 0.7. That might be, let me check it on another screen here, another monitor quote system. Well, it caught up. It was 0.7% versus when QQQ was just over 1. This thing doesn't trade as accurate as liquid is there. There's NDXC, the Nasdaq equal weighted. This is what it's tracking. It just takes it puts an equal weighting on all 100 components instead of a market cap weighted, such as QQQ has, which then skews it to largely to what Apple, Amazon, Microsoft, Facebook, and those stocks are doing. Okay, and SPY, I can't remember before I stopped the video if I covered the SPY 60-minute chart. I know I just did QQQ 60-minute, and same story on SPY. You have the August trading ranges there, very technically significant. We are down in the middle, below the middle of the range here. We have Gap City right here, lots of gaps and reactions around this 290-ish level, and that was highlighted early. And so far, that's what stopped the rally cold. You can see SPY is still well shy of backfilling the gap, or not even backfilling, even testing the bottom of the gap. There's a gap. So you have the top and the bottom. Those are two natural magnets, if you will, or support or resistance levels now that they're overhead, the top and the bottom of the gap. However, QQQ, I should have mentioned, already checked. It hit the top of the gap when it came in today. That's that 185.90. Remember, it's a level I've had on here for a while, and it was all these gaps back here, a lot of reactions, and it was again the gap from day before, or yesterday's gap, not today, but that's yesterday's gap. So right there at the bottom, and you can see it also better on this 2-minute chart right here. This is the same 2-minute chart, covered it yesterday, covered it earlier today, and each of these were levels laid out in advance, and you can see it's not by mere coincidence. When you came up first, we had the downtrend line. We hit it 1, 2, 3, 4 times today, finally broke out. When we broke out, we didn't just meander around. It was a big up right to that 185.23 target resistance level, pull back, come check it again, then we broke out, went up to the next target, which is a resistance of 186. I have it on here, and again, that's also the bottom of yesterday's gap right there. And so far, we've had a couple failures. We haven't reversed yet. Got to give the market points for that. I showed you this setup right here, this in the day trading as a day trade idea. Break of this minor rep wedge, and what I said, can short 186 with a stop somewhat above, because if they get much into the gap, they'll probably make a run to backfill it. Gaps, once entered, not always, but usually they're backfilled once entered from above, so or from below or above, I should say. So that's about 187 and change to get a backfill on that gap right there. But so far, like I like to say, resistance is resistance until less taken out, and that's where we're at now. So let's not get overly concerned with this. I guess for swing traders and in a bigger picture, and regarding the SOXS short trade yesterday that we entered, everything that I see looks fine right now. We still have these breakdowns intact here on the weekly chart, but tomorrow is Friday, so we're going to have the rest of today, another hour to go, and tomorrow, and all QQQ has to do from where we're at now is move up about 1.5% would put us back on the trend line. So if we can close there tomorrow, that's where this weekly candle will print. Then this will have proved to have been a whipsaw signal. Doesn't mean it could be a back test if we close right on it, and then we could reverse. So really, QQQ needs to get well up, back up inside here to foil anything that I see that's gone on here on this this weekly chart. But again, this candle's still not yet finalized, and then of course we have some work to be done. We need to break the recent lows. Pretty much today's lows, since we slightly undercut the 200-day. That and this 182-ish support. Break of that should do the trick. Whether it comes tomorrow, next week, or 3 months from now, that's the level I'll be watching. And then, of course, on SPY. SPY already broke down a while ago, and so this weekly candle, SPY broke down here, back tested. So really, it's all, to me, it is all about QQQ and these tech stocks. And again, there's XLK. We had a pretty much close on the trend line, a hair below last week, followed through today. I'm sorry, this week. Again, these are weekly candles, and so right now XLK is still well below that trend line with 1 day to go, and so the breakdown is intact. It's not really finalized until this weekly candles close, so we're about 3% below the trend line right now. So it'd have to be a heck of a rally between now, with 1 hour left to go, and tomorrow into the close. And even if they did that 3% rally, that might just put us right underneath and give us a back test, in which case we could be rejected, or we could go up next week. Kind of leaves things a little bit can go either way if we get back up there. But as of now, the breakdown is intact here on the daily chart and that weekly. And you can see today's candle pretty much at the highs in XLK. Pretty much you can see we back tested the bottom of the gap from yesterday, and we're still well below the breakdown levels there, the BOD trend line, also within that range. So we'll end it here. Where we go from here, like I said, I favor down. I thought we'd go down earlier today. Like I said, I didn't. One thing I'll tell you is I did not see anything, and I don't think there was a news event. It must have been a technical bounce off the 200-day. I know there's a lot of powers that be that in the financial markets, trillions of dollars in wealth and hedge funds, mutual funds, banks, even the government has a vested interest in keeping the market up. And I'm not saying that's what happened, that this is PPT coming and buying, but there were some buyers that stepped in today, and I don't think they were natural buyers. I think this is a lot of short covering today, short squeeze. I'll tell you why in a second, and then we'll wrap it up. I told you it'd be a short video. But yeah, as far as those targets not being hit, that breakdown looked good this morning. I didn't see it coming in these charts. I don't see a lot here that says a meaningful reversal is at hand, other than being near-term oversold and all that. Let me show you why, and then we'll wrap it up. Why I'm not really, thinking this at this point in time, putting a heavy weighting into the fact that there's been a rally, and that might foil these breakdowns, and should I pull stops or tighten stops on the SOX trade and my own shorts that I have? No, I'm not. I'm holding tight on the swing shorts, and I'll tell you one reason here is gold and treasury bonds continue to hold up. A member in the trading room mentioned that treasury bonds were unfazed today, and I mentioned same with gold. I've been watching gold all day. This is gold. These are gold futures, and you can see they're still well above trend, and they've hardly budged. They're still positive today. And I'll look at GLD for you real quick. And gold's gold and treasury bonds are the two king of risk on assets. Here's gold up 0.61%, GLD, and then TLT, treasury bonds, up 1.1%. What does that mean? Why am I telling you this? Well, there's the institutional investors are referred to, and on Wall Street, it's the smart money. They do this for a living. They do it professionally, and they're typically the ones that buy treasuries. Ask yourself, even if you're an active trader, how many treasury bonds have you bought? You might have bought TLT as an ETF, but institutions flocked into treasury bonds, and they do so. Oftentimes, it's a flight to safety asset. It always has been throughout time, and for many, many years, many decades, and for the foreseeable future will be. Let's not debate that. You can look that up. Google the term flight to safety assets, treasury bonds. You'll see. So this is telling me, look, they're buying treasuries today. If the smart money, the institutional investors, thought that today was a bottom of this correction, and they thought this market was going on to new highs from here with this reversal, they wouldn't be, number one, they'd be selling treasuries and gold. They wouldn't be buying them. Treasury bonds are up 1% right now on this, and so, and you can say, oh, it's a softer than expected ISM number, but it all goes hand in hand. The bottom line is they're buying treasuries, they're buying gold, they're buying silver, and therefore they're not buying the rally. Somebody else is, probably a lot of retail traders, a lot of shorts. I'm sure there's some institutions in there, but I wanted to point this out. Now, on a final note, and we'll wrap it up here, I always say one day doesn't make a trend. So I try not to read too much into this, because tomorrow gold and treasuries and silver could get whacked, and the market could keep going up. But it is something to right now, while throughout the day, I've posted several levels where I thought QQQ would likely reverse, and just because it hasn't done so yet doesn't mean that it won't. And if it continues on up, then like I said, if you're an active trader, use these short-term charts. If you're a swing trader, like I've been saying recently, you really probably don't want to go too heavy into shorts until we get those weekly sell signals. These 200 days go on the weekly basis of 40-week moving averages. We get a little more evidence here, especially on these weekly charts, before you can really go into a pretty good size swing short position. But right now, I maintain, if I walked into got off a ship. I had traveled around the world, sailed around the world for a year, and I just landed today, and I saw what was going on and caught up on the markets. What I would be doing if I was in all cash is starting to scale into shorts based on what I've seen recently, and I can tell you right now that today would be this pushback to that midpoint of that trading range, and these gaps would be where I'd add my first position, and the way it would work from here, add all the way up to a back test, but not above. If we regain the trend lines, then we're probably going to pop and make that marginal new high. So at that point, I'd either hold tight, it's only a few percentage points. That's what I do with swing positions. You could, of course, scale out if we start running, if we get back up somewhere in here, this area about 192, 93. We're probably going to punch up to new highs, and so you could always put a stop there. And then on the flip side, I'm telling you what would happen if the market continued to go up. If it started to go down, I would also add to those shorts on, let's say, a solid break under that 200-day, especially daily close, break below price support, etc. And at which point, somewhere in here, I'd probably have come to a full short position for as much as I want to have for the next leg down. All right, we will wrap it up there. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.